Welcome to Striking Options, the show that reveals the options you have to better navigate markets. I'm Jeff Kilberg, and we've adjusted our show until we can get back into the studio. And I'm joined today by Scott Bauer. Welcome, Scott.
Hi, Jeff. How are you?
Well, I'm doing well. A pretty interesting marketplace again today, but let's discuss two topics. Are you ready to get into these two topics, Scott?
Yeah, let's get at it.
Well, we're seeing earnings season. 91 S&P 500 companies reporting this week, and investors are expecting a pretty confusing earnings season, rightfully so. So as we see delays and withdrawn forecasts on all the forward guidance, how are you approaching earnings season?
I think anyone has to really look at it very, very carefully because, like you said, Jeff, many companies are just completely eliminating guidance. And the perception could be that even with some lowered, numbers coming out here, maybe these companies get a pass just because of what's going on in the economy right now.
Oh, I think that's a great point, and a pass on Q1. But is this going to be a precursor, a look into Q2 earnings, which we'll have in a couple of months? But this visibility component, you talked about it, the transparency and the visibility that we're going to hear from some of these reports, that's what gets to be a little bit alarming short term.
No question about it. And the visibility is very murky at best because, nobody really knows when the economy is going to get going again. And it's very difficult for these companies to predict what's going to happen in a month, let alone 6 months down the road.
Well, that's right. And let's do remember that the stock market is a forward pricing mechanism. So it'll be interesting to see how it's all digested, specifically this week with so many S&P 500 companies coming in. But let's switch gears for a second, Scott. Let's move over to the Russell 2000. The Russell 2000 futures have really been interesting thus far in the year of 2020. And now all of a sudden we're seeing that lag component possibly be an opportunity. And certainly there's heightened sensitivity to all the smaller cap companies out there, but what are you seeing in comparison from the Russell 2000 futures to the E-mini S&P 500 futures?
No doubt it has been a big lag. It has really, tailed away from the broader marketplace here. And it could present an opportunity for investors that maybe look to this and say, all right, maybe it's been too long or there's been too much, too little, too late here.
That's right. And I think the small caps, when you look at a chart, there's various opportunities. And that's why it's so wonderful to have futures and options on futures, but there's a lot of different spread opportunities. So it's a potential approach to see that disparity, that dispersion between the Russell 2000 and the E-mini S&P 500 condense or shrink.
That is fantastic. That's a very, very opportunistic timeliness, I would say, or opportunity really for investors to look at that when that spread does shrink down.
Well, Scott, we always want to thank you for your insights here on striking options, and make sure you tune in every week as we will continue to strike options.